I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring the morning call. And we're going to bring you the morning call this morning after the market open because something we talked about in the morning note this morning is we're getting some follow-through to the downside in the futures. We got some follow-through in the downside in the futures overnight. World markets were red after yesterday's weakness in the U.S. markets where we saw perhaps the worst day of selling in 2014. We were able to close off our lows a little bit, but a lot of technical damage took place and took us closer to some key support levels that we're now breaking below this morning. But when you get a selling like this in a macro uptrend, you know, it's sort of hard. You're caught in two minds a little bit between looking to cover shorts early or thinking about whether or not this could be the big one. And that's what Scott was quoted in CNBC last night and Patty Dom's blog about sort of trying to glean clues about whether or not this could be the start of that big 10% correction or more, depending on who you talk to, in the market that people have been looking for the last year plus. And so far this morning, if you take a look at the chart of the spiders, we were down about 11, 13 handles in the morning, and then we're continuing to the downside so far in the session. You zoom in a little bit, there's a few trends and a few levels that we're breaking this morning with this gap down and go to the downside. This sort of accelerated uptrend has been in place since October. It was breached with today's gap down. We breached it briefly yesterday, but we're able to close back above. And then clearly this morning we're breaking below it. And then this blue line you see here is the 50-day moving average. So we're also breaking below that key support level and also the prior breakout level. That's where we found support yesterday during the session, but today we're back below it. We opened below it and we're continuing below. So what we're going to want to see is whether or not we can get a close below that prior breakout level. If that occurs and you have a minor pivot here in the spiders, it's around 180.57. If we get a close below that, nothing really in terms of support until you get down to the 177 area on the spider. So today's close will be very telling, I think. And like I said, I think a lot of traders right now are caught in two minds between taking what they can get from the short side or protecting themselves if they're long, or just believing in this market, believing that it will be resilient the way it was for all of 2013 and for 2014 so far. So what happens on days like this is that after a day like yesterday, a lot of short-term traders pare down risk. And Scott talked about that on Twitter, in the VTF. He took a lot of positions off, sort of in wait-and-see mode, and then a lot of what's going to develop now is going to happen intraday, especially today. If we can get some sort of reversal or whether we continue to accelerate to the downside, that's going to play a big part in people's approach to the market over the next few days. So in the VTF today, definitely a very valuable time to be there and be watching people's positions. And what I'm going to do is I'm going to look at some charts, and I'm also going to take a peek in the VTF just to see what's going on, give you a little taste of what goes on in that room. But first what I'll do is I'll just run through some symbols just to get a look at some stocks that we've been watching. The biotech sector has obviously been one of the big focuses in the market and been the source of a lot of strength in the market. And so what you want to do on a pullback like this is try to separate the baby from the bathwater. You want to see, you know, is everything just getting sold hard because everyone's getting a little bit anxious at these upper levels, or are these stocks actually overvalued, or are they ripe for a little bit of a sell-off? You have to separate the relative strength there, and that's where you really got to focus. And pullbacks are welcomed by traders because they give us that opportunity to identify relative strength and really separate the pretenders from the real strong stocks that could lead the market throughout the rest of the year. But I'll run through some biotech names real quick. BIIB was Scott Mark's trade idea of the week at the beginning of the week. A little bit weak so far in today's session, but as long as it holds above the 8-day moving average, still pretty healthy. One to keep an eye on if it can contain some of the damage that we're seeing today so far and bounce like it has so far off the lows of the day. I think this is one that could be ripe for continuation to the upside. The thing with BIIB, though, is that earnings are next Wednesday, so We don't believe in taking short-term equity positions into earnings, so something to keep an eye on there. One that I mentioned on Scott's morning note yesterday was Aria. This is a stock, a biotech stock that's been beaten down a lot, this big gap down. I'm not sure what the news was here, but since then it's been trying to find footing, and there were some reports yesterday that Eli Lilly could be interested in purchasing Aria, and it led to a big, not an enormous gap and go to the upside, but it held that gap from yesterday, and then today it's accelerating to the upside, breaking above key resistance levels, and obviously a huge gap in the way. People have talked about a potential $20 price point for a bid for Aria. Who knows? Obviously a lot of room to that price, but it's getting a lot of interest this morning. Definitely something to keep an eye on in the space. Let's take a peek at ICPT, some of these wild ones recently. It's been quiet so far this morning, GALT. And one that we listed on off the charts that has yet to go, but not looking so healthy this morning, is Celgene. But as long as Celgene holds above the 50-day and holds in this upper level pattern that we highlighted, it'll be healthy, and it might be a more compelling entry to buy sort of in the bottom of this pattern rather than chasing highs. But depending on the type of trader you are, how aggressive you want to be, that'll determine how you treat a stock like Celgene, or whether you want to chase the breakout or whether you want to buy at the bottom of the pattern. But this wedge pattern is tightening unless we get a break below it on this market weakness. Keep an eye on Celgene. And Amgen is one that money rotated into this week after some other names had led. Amgen saw that nice breakout earlier in the week, but weakening a little bit after that. The 8-day moving average, sort of like on BIIB, is the level to watch on Amgen. Keep an eye on there to see whether the weakness is contained. And it's not surprising to see market weakness in some stocks, even leading stocks, with the market as weak as it is. So it's just like I talked about. Identify whether or not these can hold higher, show some relative strength, and then can be the go-to names over the next few weeks. And we'll run through some tech names. Go with Apple. Apple a little bit weak today, but a nice bounce back. Sort of with Carl Icahn, you're getting a law of diminishing returns with his tweets and his public comments. And I think he's really doing himself a major disservice by talking as much as he is and being so boisterous about his complaints with Apple. I think it's being a little bit counterproductive. You didn't get much of a boost yesterday, despite news that he was buying $500 million more of Apple stock. I think people are starting to tune him out a little bit more because he is just sounding like a crotchety old man. But anyways, weak a little bit, not surprising with the market as weak it is. So maybe if Apple can hold above its 8 and 21-day moving averages, which is now back above, maybe you could get a run higher. But I do agree with Carl that Apple is undervalued at this point, and I think is a sound opportunity to get involved here. Let's take a look at Amazon. I'm just going to run through some charts real quick. Amazon a little bit weak this morning, but all in all holding up okay. Just right at its 21-day moving average. So far in Google, the 8-day moving average has been a buying opportunity pretty much since October. Any break below it has been buyable, but today we're breaking back below it. See if that remains the case, or whether we maybe go down to the 21-day moving average, which we've only done once since October, but it's definitely leading the group. Tesla was weak this morning, but it's bouncing so far during the session. It opened sort of near yesterday's open, but it's climbing, as you can see on the chart. See if it can break above yesterday's high. I think that's also a key resistance level here, back at 181.43 back from the beginning of November. So if it can do that, the next resistance level wouldn't be up here until 168.79 and then all-time highs. So a swift return to grace for Tesla, and one that with a high short interest is always ripe for a squeeze. And that's what we're sort of seeing here after this big igniting bar that we took note of back on January the 14th. Then I'll run through some banks. The banks have been weak. They started the year strong, but then during earnings season, we've sort of had a situation of the haves and the have-nots. Actually, one more tech stock I want to take a look at is Twitter. As I've been talking about this as one that it's been frustrating traders a little bit because it's been looking like it wants to bounce, ignite a little bit more, but every time it looks like that's going to happen, it tails off, and it's been frustrating, I know, on the virtual trading floor, and just traders I've been around have been frustrated by the short-term action. Here, it looked like it wanted to follow through to the upside, reverse to the downside, put in a little bit of a tail. Next day, same thing. Looked like it really wanted to ignite, but reversed back and paired most of its gains. Then the following 2 days were choppy a little bit. On Wednesday, looked like it might wanted to go. Same thing, tailed off. Yesterday, opened lower, found support at its 8-day. And then today, showing some relative strength. It's just pulled off here in the last few moments. But as long as it holds above the 8-day, I think just be patient with this thing. Don't overtrade it. Don't panic on it. It is fading a little bit in the last few minutes, but like I said, as long as it holds above the 8-day or even the 21-day, I think because of the small float on this name, I think it's going to continue to get high demand and continue to get some nice price action. Going to the banks, Goldman Sachs remains weak. The banks have been, it's a case of the haves and the have-nots. We talked about how Morgan Stanley had a really strong earnings report. Maybe it was going to separate itself a little bit and become one of those haves within the banks, but this is not the type of price action obviously you want to see after an earnings gap and go to the upside. 4 days of really intense selling, and now looking like it wants to threaten this support pivot here that is at 30.60. So overall, the bank's not looking like an extremely healthy sector right now. I think overall bank earnings, there was a few reports that were okay, but overall bank earnings not stellar, and maybe not a sector to be focusing on in the first quarter of 2014. And I'll go through a few earnings names. Last night, Microsoft reported. That was the most notable name that we've been following. It's a stock that I like. You might have heard me talk about it before, where you get a 3% dividend yield on this name, and then there's a lot of potential, I think, to become an innovator again, make a big CEO hire, use some of that big cash pile to make some strategic acquisitions and change the profile of the company a little bit away from just the dying Windows application and move it more into the hardware and start playing catch up with names like Samsung and Apple. And we got a nice report yesterday. The stock isn't as high as it was pre-market yesterday or after hours yesterday, but still nice gap up. As long as it can hold at least 50% of that gap, I think that's constructive. They had nice sales of their Surface tablet, which will be a big area for them if they can get their phones and their tablets to pick up the pace a little bit. But like I said, just see what it can hold. It's above the 8 and 21-day moving averages. It's above all moving averages. If it can hold most of the gap today, I think that's constructive to potentially challenge these highs from November and then perhaps get beyond that. Then yesterday, Netflix was the big notable name that reported earnings. It finished up about 17% after another really impressive quarter. Took it back to all-time highs. Today, Netflix opened lower with the market, but so far showing relative strength. Psychologically, it's a little bit hard to chase these names after big moves, but depending on your time frame, if this can put in a nice sideways consolidation above this gap at these highs, then I think it could be one that could be ripe for another squeeze and another momentum move. So don't let the fact that it's come 17% yesterday prejudice against a potential trade setup there. And then eBay is one that we talked about. The earnings report itself was actually pretty weak from eBay. PayPal is the only real unit of eBay that's growing at all and allowing its valuation to be what it is right now. And Carl Icahn came in and said he bought a stake in the stock, and is putting 2 people on the board and is also going to push to spin off the PayPal unit. So a lot of question marks. It actually boosted the stock initially after hours. It spiked up above 60, but then pulled off after hours. And then yesterday was weak, went negative actually briefly, and then after bouncing in the afternoon yesterday, gap and go to the downside today to erase all of those losses. So a lot of questions remain for eBay. eBay is really not much of a company without the PayPal unit, because eBay is not really growing at all. So it'll be interesting to see how that plays out. And if that spinoff ever did happen, then PayPal would be the name you would want to be involved with. That is why we liked eBay on Scott's 2014 predictions, in addition to the technical channel that's been in place for a matter of almost 2 years. The fact that they're a leader in that mobile payment space with PayPal. And then another name, Cree, reported a couple days ago. Not the action you want to see during earnings season. It gapped up and accelerated to the upside. Looked like it might want to break above resistance, pivot resistance here, and then enter more of this gap back from its last earnings report, which was really weak. But yesterday it reversed really hard to the downside. And then today initially followed through the downside, but is bouncing a little bit. See if it finds support from that 50-day moving average or something like that. But here we're going to take a look in the VTF, see some things that are going on. If you've never seen the VTF, this is basically our platform for traders who are a little bit more active, who can sit in front of their computer screen for most of the day or some days. And you have the chat room obviously over here to the left, where you have subscribers and T3 Live contributors contributing ideas and asking questions and things like that. As the community has grown, this audience has become much more value added. We have the contributors obviously with T3 Live that you can see all of Mark's positions as they update in real time. Mark usually has more positions than anyone else. These options positions down here show you the month that they expire and the strike price. So Mark has a whole list of options positions here as well. And then today we have over 400 people in the chat. So like I said, as that community grows, it just the more eyeballs you get in there, the more ideas get shared, and I think it's been a really thriving community over the last year and a half during this market cycle. And you can see, as I talked about Twitter, Scott is currently long Twitter. I believe he just recently put on a Spiders long, looking to test this dip to see if it could be buyable. Goldman Sachs, perhaps the banks are a little bit oversold, looking for some sort of snapback there. And then Bank of America, the sort of the best in breed bank for the last year plus, and the name that we mentioned on his 2014 predictions. And then Apple as well, like I talked about, showing a little bit of relative strength, could be a signal that if the market does find a bottom, maybe all that attention from Carl actually could turn out to be a good thing, and you could get some more upside momentum in Apple. But I just wanted to give you a little bit of a taste. I was hoping maybe somebody would initiate or close out a position here so you could see how it happens in real time. You can see the position show up long when they're initiated. They exit into the flat column when they're exited. Not a lot of people looking to short right now, it appears. It looks like most people looking to play this dip a little bit, banking on the market being resilient the way it has been in 2013 and 2014 so far until the last couple days. But that sort of seems to be the mentality right now, and I would say, like I said, that traders are caught in a little bit in two minds right now. This could be a spot to try to buy a dip, but overall I think you look for a little bit more calculated type setups to get aggressive. I think people are dipping their toe in a little bit right now, but there's sort of a lack of clarity. Some people think that, yeah, we could get that 10% correction, that big one, as everyone's been talking about, but until we get more signs that that seems to be in the offing, I think you don't get too aggressive chasing shorts after 2 days down. But this has been John Darcy, a little bit different flavor here on the morning call, but I'll see you back here for the daily recap to see how all this plays out.